We think there's some additional upside here. I think Pinterest really stands to benefit as a rotation idea as market conditions firm. We are of the market recovery camp. And we recently published a study showing that the initial stages of a new bull market are typically driven by the prior bear cycle's biggest laggards, and that's going to include Pinterest. Here's a stock that retraced most of its 2020 run-up, and against a still negative news cycle has generally stopped going down since May. It's been building a base. So I think the trade here is, as long as the stock is above $17 support, that's the recent lows it's been holding, we see additional counter trend upside into the mid to upper $20 range.
Interesting. Julia, which company is this more like? Is it more like Snap with the auction-based exposure and the performance ad exposure, or is it more like Google's search business and Amazon's advertising business, which is much more attributable to intent?
Look, the benefit that Google has is not just the fact that search is so much about intent, but Google has such a massive established business. I think Pinterest would like to be more like Google, but it has a long way to go before it can have that kind of measurable intent, and it is certainly nowhere like Google when it comes to scale. I think, though, that's the opportunity for the new CEO, Bill Ready, in terms of driving it to be more about that intent and driving purchase activity on or through the platform. But for now, it is a smaller player, more similar to a Snap.
Well, we'll see which one it looks more like after hours. Thank you, Julia. Next up, Caterpillar. Shares are down only 5% this year as traders wait for updates on any foreign exchange and supply chain headwinds. The street will also be looking for any construction industry outlook from this industrial giant. Seema Modi has the story on Caterpillar. Seema.
Hey, John. Well, as you know, this is widely seen as a name that's sort of an economic bellwether. And with the data sort of all over the place, Caterpillar's numbers and orders related to big machinery and equipment will be in high focus. We heard from ExxonMobil last week talking about increasing capital expenditures. So Caterpillar's sales of oil production equipment tied to drilling, pipelines, that could provide good foresight as to whether production is in fact picking up and in which markets. We're looking at the stock up about 10% in the past 1 month. Its best month in 4. But the stronger dollar, as you say, will be a key headwind. UBS points out that Caterpillar generates about 57% of its revenue outside the U.S. The other big topic will be China. John, the picture out of China has been less clear. You had Apple last week say that iPhone sales did come in better than expected despite the lockdowns there. But then Adidas in the retail apparel space cut its outlook because of weakness in China. So what Caterpillar says about its growth in that market, it makes about 5 to 10% of its sales there, I think will be really key. It'll give us a better picture of what's actually happening on the ground.
Seema, thanks. Ari, what would a surprisingly good quarter look like from Caterpillar, and how likely is that to happen?
Well, looking at how the stock's traded, I think it exhausted a lot of its downside into that July low. Our issue here, John, is we're just unsure about the upside. And here's why. We're expecting a growth-led recovery in the market, but we're not necessarily expecting one to be driven by reflationary themes like Caterpillar. Our take is the macro trends resemble 2019 very closely. And if we think back to that bull market, Caterpillar participated, but it was a much bumpier path to those gains with some knee-jerk reactions along the way. So if I'm a trader here, I'm considering about lightening up on Caterpillar on strength. There's a gap at $212 that I think is going to act as some resistance, and I'd be selling it into strength.
Seema, quickly, how much are interest rates seen as impacting Caterpillar? I don't know, from the analyst notes, what have you, giving that, you don't buy this equipment for cheap.
No, you certainly don't. And many of its customers, they take out loans to fund the projects, their real estate projects, their housing projects, and all the different equipment they need to buy from Caterpillar, including excavators. So absolutely a stock and a sector, industrials in general, that are sensitive to rising interest rates. But this is also a company that works on longer term projects, so 5 to 10 years out, that could make it a little bit less prone to rising rates. We'll have to see tomorrow, John.
Yeah, especially if you think the Fed's going to be cutting next year. Seema, thank you. And a quick programming note, the Caterpillar CEO will join Squawk on the Street tomorrow morning after those results at 9 a.m. Eastern Time. You won't want to miss that. Now, finally, JetBlue shares are down 40% this year as investors seem skeptical of the Spirit takeover bid winning regulatory approval. Investors also listening for any insight into consumer travel trends heading into the fall. Phil LeBeau has the story on JetBlue. Hey, Phil.
Hey, John, a few things that people will be looking at. The obvious question that is going to come up during the conference call with analysts, where things stand in terms of the progression towards talking with regulators, getting the Spirit merger approved by Spirit shareholders, et cetera. We know that those calls will coming up. But the business itself, in terms of the airline, profitability level, where is it relative to other airlines? They had a really bumpy May and June for JetBlue, so that's going to get a fair amount of attention. And what type of growth are they seeing in their strongest markets? We're talking about those routes down to Florida, the transcontinental, which has been growing, and obviously they've added service over the last couple of years to the UK. Those will all be in focus during this earnings report and the conference call. Yes, there will be plenty of questions, not only about the Spirit merger, but also the Northeast Alliance with American Airlines. Remember, the trial with the DOJ trying to unwind that alliance between American and JetBlue, that starts in September. So it's right around the corner. Lots to be discussed during the conference call.
Okay, well, Ari, the negative take on JetBlue Spirit was that really what JetBlue wanted to do was keep Frontier from getting it, right? It didn't really want Spirit to begin with. So where JetBlue is priced right now, does it particularly need Spirit, or has it already gotten the benefit of this situation by Frontier not having it? Is there downside here regulatorily or what?
I think for the long term, yes. Listen, this is a beta trade. If we're right about our market recovery scenario here, airlines are going to be able to move a lot in a very short amount of time, and that includes JetBlue, which is near its cycle lows and quite extended below its 200-day average. But this is a rental. You need a tight stop, and you're going to have to sell it as well because I think there's a ceiling out there. What gives us concern in our work for the long term is that the stock recently fell below its July of 2008 relative low versus the market, versus the S&P 500. That indicates to us that this is still a trend, that long-term underperformance is still intact. But listen, it can move a lot in a short amount of time. It's trying to build a base at $8, so you might be able to squeeze out a trade into 10. Just from a very near-term basis.
Phil, relative to other airlines, how healthy is JetBlue operationally when you're looking at, pilot relations and you're looking at how much they reduced a lot of these airlines, their staff, and then tried to increase volume and have run into trouble? Are they better, worse positioned, or about, middle ground?
I'd say they're about the same. John, I think they're in the same boat as every other airline out there. Now, look, not all airlines are the same. Some are better run than others. And when you talk with analysts, they clearly have a pecking order in terms of who they think are the most efficient of the airlines versus the least efficient of the airlines. But JetBlue, in terms of operational challenges, whether it's staffing, whether it's adding too many routes and then not being able to meet the demand that was out there in June, they're about where everybody else in the industry is at.
Okay. Well, investors know what they need to know now, or at least more of what they need to know to get ready for those reports. Phil, Ari, thank you.